Greetings from the future of transportation, where Tesla is leading the way and electric cars are redefining how we travel the roadways. Visionary businessman Gary has some audacious expectations for the future. Get ready for an incredible adventure as we explore Gary's secret plan to make unthinkable profits in the next 7 years and profit from the 54 million electric cars that Tesla will sell by 2030. Prepare to be amazed by the game's amazing predictions, explosive growth rates, and limitless possibilities evolving technological landscape. It's time to fasten your seatbelt and come along on this thrilling journey into the future. But before we do, please click the like and subscribe buttons. Now that we have cleared that up, let's begin the conversation. Let's first learn a little bit about Gary and why his opinions about Tesla are important to us. Prominent investor and former CEO of Elon Asset Management is Gary Black. His proficiency in finance and investment management is well known. Given that he has held executive roles at a number of significant financial firms, such as First Boston, Janus Capital Group, and Goldman Sachs, what is his opinion of Tesla? Gary thinks that by 2030, Tesla will hit amazing figures. Therefore, now would be a good opportunity to examine the covered approach. There will be 3 times as many Teslas shipped each year as there are right now by the year 2030, according to the firm. A conservative estimate is 10.8 slots. Let's get to the meat of the topic. He expects that EV adoption would grow from its current 3.4% in 2022 to 6.6% in 2021, and then to 10 by the end of 2022, 16 in 2023, 20 in 2024, etc., until it reaches 60 in 2030. His estimations put the number of EVs in use around the world in the year 2030 at a multiple of 60. As many as 54 electric vehicles will be on the roads throughout the world by 2030, he believes, but that's not very likely because of all the robo-taxes. Tesla only has insurance and power interruptions. His predicted yearly growth rate of 47% is amazing, even if he is conservative in his forecast due to his sole focus on Tesla's car production. In any event, you may have seen that his PE spans from 61.2 in 2022 to 64 in 2030, and his stock price tops at $1,050 that same year. Here, I want to reiterate why we should take Gary seriously. One of Gary Black's most prominent accomplishments in finance was his successful leadership of Janus Capital Group, where he served as CEO from 2006 to 2009 and massively enhanced performance in addition to his work in finance. Gary Black is a noted analyst on economic and financial matters and has been on different media sites, such as CNBC and Bloomberg TV. Did I know his stuff? Thus suppose that, as Gary says in 2030, Tesla's EPS is $42 and the stock price is $1,050. The price-to-earnings ratio would be 6.4. He also projects amazing yearly growth rates of 44 in EV adoption and 45 in deliveries. One thing that truly doesn't make any sense is his projection that Tesla's account will climb by 14 from 3.1 billion to roughly 3.6 billion by 2023. It's just utterly ludicrous. It'd be insane if Tesla still had to dilute in 2030 after making over $200 billion in net earnings. If you want to invest $200 billion each year, you need cut back on certain buybacks with the same $1,050 price per share tag. In 2030, the total market cap will climb to nearly $4 trillion owing to inflation. The year 2023 will be similar. Black feels the Tesla share price would reach $550 soon if we get the $552. A share of 69 PE has a market capitalization of nearly $2 trillion compared to the present market cap of $600 billion. Gary Black forecasts that the company might hit a price objective of 69 PE in 2023 within the next 6 to 12 months. That makes logical sense. But let's talk about the stock price for 2024. 60 would be equal to 616.69 or 600 per share. A market cap of $2.5 trillion and a net income of $45 million are both reasonable goals, given that automotive production will be Tesla's main operation in 2025. If they're making so much money and shattering earnings after, say, a year, the PE would drop dramatically. Consider the fact that their income increased by $20 billion from $46 billion to $66 billion in 2026. With a PE of 45%, the company's market cap will be close to $3 trillion with a PE of 40%. I arrive at a price per share of $832. Right there's a semi-automatic 4x4 vehicle on its own. That's ridiculous, and again, dividing 25 by 23 for Tesla makes no logical sense. But you guys know BFSD? As you can imagine, the price shoots up like crazy. We'll get into that in a second. First, let's talk about who agrees with Gary on being a Tesla bull. Kathy Woods and her investment firm ARK Invest has been bullish on Tesla. Being one of the largest investors in the company, Woods has been a vocal supporter of Tesla and its CEO Elon Musk, often citing the company's potential for disrupting multiple industries, including energy, transportation, and autonomous driving. On the other hand, Early Munger, the vice chairman of Berkshire Hathaway and longtime business partner of Warren Buffett, has been critical of Tesla and its CEO Elon Musk in the past. Munger has called Musk asinine and criticized Tesla's high evaluation. In May 2021, a Munger spoke at the annual Berkshire Hathaway shareholder meeting and was asked about Tesla. He said, "I have the reputation of being an old fuddy-duddy. But if a fuddy-duddy like me can see it, somebody else is making the decision to buy Tesla at these prices, I think it's a huge insanity." Munger has also criticized Tesla's reliance on government subsidies and incentives, saying he thinks Elon Musk deserves credit. He's a clever man, but I don't think the automobile business is easy, and I think Tesla has some natural limits on how fast it can grow even with government help. Other investors may have different opinions on Tesla. As with any stock, there are always different views and perspectives. Some may see Tesla as overvalued or risky, while others may see it as a good long-term investment opportunity. It's always important for investors to do their own research and make informed decisions based on their own risk tolerance and investment goals. Okay, now it's time to layer on top of Gary's prediction some FSD predictions and watch what happens. I look forward to this. As the FSD price rises, the average cost to you will be $12,500 in 2022. In fact, they'd bump the price up to $15,000. A lot of bears predict that by 2030, FSD won't even be worth $29,000. Buying an FSD in 2020 will set you back $8,000. The initial $6,000 has been increased to a hopping $15,000 by the end of the decade. I anticipate a fourfold increase from the current levels. Based on historical trends, we may assume that the FSD profit margin will exceed $1.2 billion by the year 2022, with sales increasing by 2% per year from their current level of approximately $2.5 billion. An extra $2 billion will be added for a total of $15 billion in net income, or $303 per share at a PE of 61. Intriguingly, the price per share can go anywhere between $632 and $729. The stock price will reach $12.82 by the year 2030, and the company's market valuation will be close to $6 trillion. People only know that the value of vehicles has increased from $10.50 to $20.30 per share, and with the addition of FSD, that number will rise by another $230. Seriously, that's amazing. In a minute or two, this place will be completely out of control. If the stock price is true, you will have a ridiculous $500 gain by the year 2030. I'm putting all of my money into Tesla stock. I bought so many Tesla shares yesterday and today that I now need to sell the moon to pay for them. I'm curious as to how well this will hold up over time. I don't know about you, but I'm feeling optimistic. Investors are uncertain about the future of Tesla stock in the new year. Despite this uncertainty, Tesla has historically been a high-performing stock, particularly during its impressive surge from mid-2019 to late 2021. In early January, the stock hit a bear market low of 101.84, but has since rebounded by approximately 93%, although Tesla reported mixed results from the fourth quarter of the previous year, with higher-than-expected earnings but lower than anticipated. Revenue for the stock continued to climb due to Musk's optimistic outlook for 2023. Never count Musk out. Do you agree with Gary Black's assessment? Is there logic behind it? If you liked the video, be sure to smash that like button and subscribe button, and I'll see you in the next one.